Welcome to The Explainer. We're jumping right into a pretty big financial mystery today. It's like we're following a trail of breadcrumbs left by some of the smartest folks on Wall Street. And it all kicks off with this number right here, $520,000. Now look, in the grand scheme of things, maybe that doesn't sound like a jaw-dropping figure. But this is something different. This isn't just somebody buying stock. This is the price tag for one single, massive bet on where the entire housing market is headed. And you gotta understand, this was no random lottery ticket. Nope. This was a really calculated move by what the pros call smart money. So, what we're gonna do is follow the clues from this one trade and try to figure out exactly what they think is just around the corner. All right, so let's break this down. To really get why this bet is such a big deal, we have to start with the tool they used to make it. You see, the how of this whole thing is every bit as important as the why. So check this out. The investor didn't just go out and buy the stock. They used something a little more advanced, a call option. Think of it this way. It's a contract that gives you the right, but not the obligation, to buy a stock at a fixed price down the road. And why do this? One word: leverage. You get to control a ton of shares for just a fraction of what they're worth. And that, my friends, is how you can really supercharge your potential profits. And this right here, this shows you that leverage in action. It's pretty wild. If you wanted to control 200,000 shares of this company the old-fashioned way, you'd need to cough up almost $4 million. But by using these options, this investor gets the exact same upside potential for just over $500,000. I mean, talk about getting more bang for your buck. That's capital efficiency in a nutshell. Okay, but of course there's always a catch, right? This isn't free money. The stock was trading at about $19 when they made this bet. But for them to just break even just to get their money back, the stock has to climb all the way to $22.60. That's an 18% jump over the next year and a half. So this isn't some small bet on a little bit of growth. No way. They are expecting something big to happen. So that begs the big question, right? Why make such a gutsy bet right now? Well, the answer isn't really about this one company. It's about the entire U.S. housing market, which, well, it looks like it's about to go through a massive change. You know, for the last couple of years, we've been in what everyone's calling a housing winter. The Fed was jacking up interest rates to fight inflation, and it just froze the market solid. But the tide is starting to turn. The Fed has finally signaled a pivot. We've already seen the first rate cuts, and pretty much everyone agrees we're now in an easing cycle. The forecast? Rates are expected to keep on dropping right through 2026. And that brings us to the one number, the magic number that everyone in real estate is watching. Mortgage rates got crazy high, peaking way over 7%. That just priced so many people out of the market. But economists, they're all pointing to 6%. That's the magic number. It's a huge psychological tipping point that could just unleash a flood of activity. And let's be clear, getting to 6% isn't just a small adjustment, it's a seismic shift. I mean, economists at the National Association of Realtors did the math, and that one drop would instantly bring 5.5 million new qualified buyers into the market. That's not a trickle. That is a tidal wave of demand just waiting on the sidelines. Okay, so we have the why now. Now let's talk about the who. Let's look at the actual company this bet is on, Rocket Companies. Because this is the other half of the story. This smart money isn't just betting on a better market. They're betting on a company that has totally remade itself to take full advantage of it. So, late in 2025, Rocket made this huge move. They went out and bought Mr. Cooper, which happens to be the biggest mortgage servicer in the country. Now, this wasn't just about getting bigger. No, this was about building a fortress. This portfolio, it's a cash flow machine that just keeps printing money, which makes the whole business way more stable, no matter what the market is doing. So they built a fortress. And then what did they do? They went and bought the front door. They bought Redfin. And if you're not familiar, that's where almost 50 million people every single month start looking for a new home. So Rocket now literally owns the very first step of the home buying journey for millions of people. Okay, so let's put all of the pieces together here. First, they've got this huge base of customers from the servicing business. That's a captive audience they can offer refinancing to for basically zero marketing cost. Second, smashing these companies together is expected to save them $500 million a year. And third, they've got this AI platform that lets them handle way more business without having to hire a ton more people. What you're looking at is a machine that is perfectly built to make a ton of money when the market turns up. All right, so we've got the setup, right? A housing market that's thawing out and a company that's been totally redesigned to thrive in it. So now for the big question, the bottom line. What could this $500,000 bet actually pay off?
And this table, this gets to the very heart of the strategy. It's what traders call an asymmetric bet. It just means your downside is small and you know exactly what you can lose, but your potential upside is, well, it's massive. Look, in the worst case scenario here, the loss is pretty contained. But if this whole thesis plays out, the returns just go exponential. We're talking a potential return of over 600%. It's a bet with a built-in safety net and just an absolutely explosive upside.
But look, let's be real. There is no such thing as a sure thing in investing. What's the biggest risk? Inflation. If it comes roaring back, the Fed will have to hike rates again, and boom, the housing market freezes right back up. And of course, just trying to merge these giant companies is a huge challenge in itself. But the company has hedges in place, and that fortress balance sheet gives them a lot of firepower to get through any rough patches.
So when you boil it all down, this whole trade comes down to one big idea. The housing winter is over, and spring is coming in 2026. This investor has placed a huge, leveraged, and very specific bet on that future. And that leaves us with the final question. I mean, it's not just for them. It's for all of us to think about. Is this a calculated masterpiece or just a reckless gamble on the American dream? We'll have to wait and see.